Hi everyone, so new coverage from America. Beyond Meat, the hot stock. They make vegan meat. So look at the sales first. The sales have grown tremendously. 13 million in the first quarter of 2018, almost 100 million in the first quarter of 2020. This is what's happening to the retail. So supermarkets, etc. It's picking up quarter on quarter. But when we look at the restaurants, that is not surprising, down. But what we think is as things open up again, second into third quarter, the sales will start picking up. So it's been growing at triple digits, and we're forecasting 60% sales growth for the next 12 months, and it will reach 170 million by the first quarter of next year. So cash flow, not surprising. Cash flow is negative, operating negative, investment negative, and it's a bit higher in the first quarter. So the 12-month free cash flow is minus 85 million. But a lot of that is working capital, short term, 77 million. So if we take that out, then the free cash flow is almost positive. So what we're doing is we assume, so there it is, we're assuming some positive cash flow we've put it in the first quarter, and that brings the 12-month cash flow to plus the next 12 months. In the balance sheet, unusually this one has been net cash all the way. Even before IPO, they still had $5 million of cash. Now it's at 216, so it's come down because of the negative cash flow. But with our forecast for positive cash flow, that will come back up again a little bit. Bit disappointing. Well, it would be better, I think, to have debt. Most of these startup stories are leveraged, and that leads to big gains down the road. Anyway, when we look at the profit, so they were in loss. Last 3 quarters, it's been in a net profit. When we look at the cash costs ratio, so this is the depreciation added back to net profit minus the sales divided by the sales. So that's at 95% in the first quarter, 99% over the last 12 months. So it's come into plus. Still not a very high margin. We use that 95% for the next 12 months, and we get the first ever 12-month positive net profit. In terms of valuation, there's the cash flow, so that's $12 million. It's got a current market value of 8.1 billion. So we used a very aggressive 0.2% valuation, and that gives us a lower market value, so a lower target price of $93. You can see all the valuations. Whoops. So 14 times sales, 81 times assets, 20 times equity. So we're used in Indonesia to looking at numbers which are all less than 1. Anyway, we shall watch this one with great interest going forward.